Good morning, everyone. So today I'm 2 minutes early. I was a few minutes late yesterday, so we're gonna average it out and mean revert the time that I start. Anyway, I'll wait for people to filter in, and while I'm doing that, I'll start with a shameless plug, and then I'll go back to another one to it again later. So next tomorrow on Wednesday at noon, I'll be on MT Live, Master Trader Live. I have it. I retweeted it on Twitter. I'll send it out again to my subscribers, etc. Let everybody know. And Greg and Dan are my former TA mentors. I, I had two official TA mentors, so to speak, and they're the most recent ones, and I think the best. And we'll be comparing TA to gamma and the confluence or lack thereof. And they're good guys, they're funny guys, they have integrity. Um, Sometimes they're not quite as funny on the live presentations, they try to be more professional. But I'll see if I can loosen them up. You guys know me. Anyway, let's see what's going on here. I got a message in chat here. Okay. Uh, okay. So here we are. Quick recap of yesterday, and let me just pull up my notes here. But even without pulling up our notes, we kind of know that what happened yesterday was we came into the day with a very narrow expected move. We talked about it on Thursday. The IV was kind of muted, whatever. And where was yesterday? Yeah, well, actually, let me go back to Friday for a second, because Friday is instructive. So Friday we had this what I consider a mechanical bid all the way up to 62.80. We trickled above it and closed right below it, which was kind of a charm level mechanical bid. And then right after the close, we started pulling back. And then whatever the headline stuff was, etc. Let me make this time frame larger so we can just kind of get a little context. And then we started pulling back. And then yesterday, where's Monday? Is this Monday here? Okay, so here's Sunday in the overnight session. Then then in the overnight session over the weekend, there was tariff headlines, two-way tariff headlines. And then yesterday, we kind of opened up. Once we broke below that 62.55 level, which we flagged in our morning note, and we flagged it right here live on YouTube, um, we just started getting sucked down. We broke 62.35, 62.30, 25, all the way down to 6200, where we bounced. And then we had a mechanical bid back up, and we closed right below 62.30, the next chrome level. We had some people in the trading room that kind of saw it. Um, some people were underwater with their put credit spreads briefly in the money, yours truly included. I just kind of held on and actually made extra out of it, buying put credit spreads around it, put debit spreads around it, turning it into flies, and then peeling pieces off. But be that as it may, here we are. But the point I wanted to make about that is that we closed once again right below the charm strike. And so also we mentioned in the room that the icy whale would be coming back today. We kind of knew it all along. and I've been whale watching for a while, so I know what his I know where he's going to be going and when he's going to show up, pretty much. So that's it. And for those of you that don't know, the IC Whale is a small hedge fund slash trading service, whatever, that employs a martingale strategy. We're not going to go into that, but sells iron condors 1 DTE at the close for the next day, and they're often large enough to pretty much control the map. And so here's where he is today. 62.60, he sold the call credit spreads, marking pretty much the top of the expected range based on gamma. However, based on the expected move in the option chain, the expected move in the option chain puts us at 65 or 70 up here. That's always a moving target. So he may or may not get skewered. We'll see. Harpooned. I wish him no ill. I hope he makes money and his subscribers and his hedge fund people. However, from a self-centered point of view, it's kind of nice when he gets skewered at least once or twice, and that way we have nice big features to trade off of the next day. So here he is on top, and here he is on the bottom at 62 at 61.90. Excuse me, misspoke. Let me pull this up over here. Oh, crap. Give me 1 second. You know what? I'm just going to wing it. I was trying to find my daily note, but I'm just going to wing it. I kind of remember it after all. I wrote it. Um, and so basically, the 62.30, 35 is the inflection point. And when I pull up the other stuff, I'll show you how I arrived at that. And should we go down, have a red opening? 62.15, this area is kind of the bottom of where I would expect to chop. I have to arbitrarily pick a number to make lines on the chart. I mean, it could be a little bit lower, but 62.15, there is a feature which I would expect stall reverse over here, back up toward this 35 inflection. So the zones go both ways. They're not one way. We could be in all of them or stay in one of them, and levels become inflection points up or down depending where we are. Should we get down near yesterday's low, we have all the TA price action people looking to buy there. We have the round number there, and we have lots of flows from this put spread to send us back up. Now, of course, if IV pops, if some tariff news comes out or something, one never knows. But gun to my head, I see levels probably hold. If we didn't have an event day tomorrow, I would expect possibly the call level to get challenged. But with an event tomorrow, with FOMC minutes tomorrow, with a 10-year auction tomorrow, and with tariff taco deadline tomorrow, I would just expect positioning to be somewhat cautious. So I also expect that there's right wing hedges. Okay, that said, let's take a peek under the hood at options depth, and I'll put the links in a minute for all the discount links. Okay, so here's the IC whale. Kind of hard to miss. No, I said 10,000 in my note. That was kind of when I looked just as the trades were coming in. Apparently, it's closer to 14,000. Right here, it's 62.60 sold. And here's the long side of the trade. Now we have some up here at 70. Sometimes sometimes there's some people that do 10 wides on his trade. His trade's usually 5 wide. And we got a little bit of call selling over here at 62.55. So that's kind of why I make that the top of my range. We should stall out right in here in theory. Yeah, good morning. Yeah, I'm thinking they should hold today too. I'm thinking they should hold today too. And for those of you that aren't familiar with gamma that much, I'm going to give you the brief 1 minute explainer of what we're looking at here. So to the right, these are market maker positions. Market makers take the other side of the trade. So when the IC whale sells 10,000 contracts, market makers buy them. And they hedge by basically mimicking the direction of the trade. So the person sold these these calls, they will sell the equivalent delta in E-mini futures for this and for this, and they balance it out. And then the point is, once they're in that position, let's not worry too much about all the crazy mechanics and stuff. As we go up, they have to buy because they're too short. Remember, they sold the futures and they're trying to balance their deltas. That's what gamma is, the rate of change of delta. But as we pull back, oh, now they're too short a little bit. So they have to buy. So you get this mechanical grinding towards the level if we're close enough to it. On the other hand, OTH, if we're down here near 62.15, and this is why I picked out the bottom of the chop zone, we have a little bit of kind of buying flows from here, plus the larger buying flows from here. But let's just talk about the market maker long area from below. So as we go down to it from below, they have to buy. But mechanically, the same thing happens for us here, only in reverse. As we go up, suddenly they're too long and they have to sell. And that's kind of what happened yesterday as we got sucked below the 62.35 level. And that was with IV expanding, so that kind of contributed to that. And so you can think of these as levels, lines on a chart, but they're not going to act as a traditional support resistance kind of level. They have dynamics associated with them that are reflexive, that are a prescription, that are basically machine driven. And so that's that. Now, these are debit spread, these are credit spreads. So we have these customer long market makers short. They're market makers short, they hedge in the direction of the move. Now, since we have this here as a feature, it acts a little sloppy. But long story short, we should stay within this range. Okay, here's what I'm going to do. I'm going to find my note over here so I can keep track of where I am. Okay, so what we're looking at here is kind of the heat map that shows the whole complex, not just the zero DTE. And we see the red is kind of is market maker short, kind of a magnet up toward there. Should we get through this? This area here is kind of path of least resistance if we're heading up. If we break this kind of supportive area, then path of least resistance down could take us right down to 6180, and that's kind of what we're looking at. That's kind of what we're looking at. Let me see if I can get this centered a little better. That's right. Yeah. Okay, so apparently we got a bunch of short calls at 63.50 that somebody sold. I kind of remember that from the other day, but we don't really have to think about that today. Let's just zoom in here so we can see where the action is. Okay, so here's where the action is. Okay, a couple of lines on the chart thing that let's talk about. And one thing I want to talk about is, let me just find my notes so I don't have to find the lines again because I know I have where they are. Okay. So last Friday, the expected move was over here 61.85, 61, 63.75. That was the straddle price, how it priced out. Now, yesterday and today, what's been happening? So basically, the straddle price is right 5 points below the from last Friday. It's right below where the whale is, and I think this just adds strength to this. Institutions are going to do whatever they do for their Friday, for their next week or however they hedge out their synthetic long short, whatever. That's way beyond what we're talking about here. But these levels tend to have power. Now, since Friday, as the days have marched through, the put level, the lower level of the straddle has come down. I think it was 61.65 ish. When I looked today, it's in my notes. 61.65 ish also happens to be a low from last week. On this chart, I have it marked on another chart. Let's do this so we can kind of see the breaks a little easier. I guess this is what somewhere in here was 61.65 last Tuesday, I think it was. And so, in my note, I have just some of the levels I'm keeping my eye on. More for selling possibly credit spreads or buying butterflies or something into next week. Now let's look at, let me go back to, let's look at this. So, as I mentioned, we saw the IC whale coming. So earlier in the day, when I saw him coming, I sold some put credit spreads kind of near where he would be. And those, they're already at their 15% profit, that 65% profit target. Now here's the actual trade he did, except I did it a little further away. But let's just see this. I did a little further away on the put side. And 50% profit target would be 80 cents, so it's not quite there yet. The call side is, let's see. So if we want to close at 50%, that way we kind of know what he sold it for. So he got about $1.50, a little more for 75. He got about $1.50 for the call side, and he got a lot of credit. He got about $2 for that for the trade. And what did he get on the? Let's just see what this would be. $1.10. and he got about $2, a buck 85 for this. So he could, but he won't, close it out and call it a day. I'm going to close out my version and call it a day sooner rather than later, and then reposition. I don't mind taking whatever it is. And this is a small trade. This is more for science. It's not like a real trade. And here's a VIX trade that from last week or whatever. I guess again a small placeholder. In this account is a small IRA. I guess do little placeholders. What's this placeholder, you might ask? This is where RYLD sold their RUT calls for this month, for the month of July, last month on June OPEX. So that way I just kind of have it marked conveniently where they were. So here's what they sold, and we can see if we just go to open interest. Oops, oh, it looks like I went around them. I was trying to get cute. Okay, so they sold these to 15s. So I was trying to, yeah, I think this cost me 30 cents. So I was just trying to get cute and see if I could make a couple $100 for nothing. That's what I was doing there. And that's it. Let's talk about end of day pins, and then come back at 3:30, and we'll play pinball. Oh no pinball today, folks. I have an appointment with my allergist. I've got apparently mold or hay fevery upstate New York allergies. I'm allergic to the air or to the something. So anyway, I have an appointment with the allergist. So I'm going to be leaving at 1:30, so I won't be here for pinball, unfortunately. But we can play early pinball. And so let's do some early pinball. What do we got here? Okay, we'll play pinball on this one. And so how this thing works is, again, without going into long explanations, we tend to close right below the strike, right below the dealer long strike. So one pin would be in the 55-ish area. Okay. One pin would be in the 55-ish area, or 50. That's a 49 right below the round number. And we got another possible pin sneaking in here at 37 and a half, right below this. One at 30. One between 20 and 10 on weakness. And then if the whale gets skewered to the downside, somewhere within the whale, then if he really gets skewered, if he gets harpooned and drowns, then down here somewhere at 61.70. So we have 62.49 and we have 6,200. Almost a 65% difference in where we might close. Now, what's fun to do sometime, and I've been known to do it. Whoops. Is I gotta go to this one. Is okay. So 6,200, my man said. Let's take a look at that. So if I wanted to target something like that, maybe let's just start off wide and just kind of see what that would look like. Something like this for 55 cents. That's pretty cheap. So I might, as a matter of fact, I will throw one in now for 55 bucks, 47 bucks, whatever it is, and see what happens. It gives me something to play with. Or, I you might want to do something like this, whatever. or if this wasn't here, a 10 by 15, basically make it free, saying that the IC whale is going to hold if we go down. Or we could look at a call and the 50, my man says. And so if we go something, first let's look at something like that. That's expensive. 40, uh, 40, 50, 60 would be something like that. A little bit expensive. Whoops. Well, I'm not going to put my password in for you guys, so hold on. Not that I don't love you all, but still. I'm back. Of course, you could always do it like that. Same difference in price. So I would wait for weakness before I totally put this in. I don't have a strong bias where we're going to close, but let's look again. Where the bigger blues are the more likely ones as of now. So that 50-ish, if we get sucked up, but the only turd in the woodpile here with that one is big day tomorrow with news. So down in this area or flat, wouldn't be so crazy to expect either. And as the day unfolds in the trading room, we kind of talk about it and we recalibrate our expectations. And yesterday I tweeted it out. Um, there was pretty good indication that we were going to close down there, that 25-30 level, and some of us took some flies. Um, some people took some scalps down to that area, and they did pretty good. So a lot of times it's a moving target and evolves over time. So there's that. Let me stop this for a minute. Now it's time for me to do my usual. And let's put in the old discount code. And we'll look at mental Q in a second too. And so I got one discount code for options depth. That's what we were just looking at. I got another discount code for mentor Q, and that was a chart I opened up with. I didn't show you guys the roadmaps. I'm going to show you that in a minute. And what they have is unique is they have futures gamma. Not very many people have that. I'm really not sure. Maybe a couple, but no one that I really know of. And then, of course, my discount link. And paid subscribers get cheat cards levels. We screen share, we talk about it, we talk about trades. And then there was a somewhat fumbled launch of a premium service that's still kind of open if you go to my Substack. Uh, it's annual pricing. It's $600 a year now. You have to pay the whole year. And there'll be kind of coaching and some content that's just going to go for the premium people. Tentatively schedule the first coaching session for not 6 o'clock, for 7:30 on Wednesday, this coming Wednesday, via, we'll probably do it here on StreamYard. Is it a butterfly? Henry asked me. Hold on. Is what a butterfly? I'm not sure what the question is. Let me go back to here. So what I was showing there was a butterfly, but what the IC whale does is he sells an iron condor, and here he is. Can't miss his butt. Now, let me just show you this, because I just like the visual. What can I tell you? And this auto updates are kind of like that too. Most instant update yourself if you want to. This auto populates. And so what I like about this is real simple, real clean. You can see I use the roadmap feature. I can see where the zones are. Of course, I superimpose my levels on it, so I know what the reaction I expect to be is. And so we see here's the I see whale over here. So I got his butt right here. Here's the 50 round number, 6,200 round number, and of course there's a whale here, and here's 6,150, which is the obvious extreme. Posted T live tomorrow at noon with my former TA mentor, Greg and Dan. It's on Zoom, it's on YouTube. They probably broadcast it on X. I'll be putting it out there. And so there's that. All right, let's go back over here. And so here's where that fly was. Let's say how puts look like now. 61.90. So they 30 cents. Those are nice and green. They can just close that out and call it a day. But if I wanted to sell a put credit spread for today, eh, maybe down here at 85 for 55 cents, that would look reasonable. On the call side, go the same 15 wide up here. 80, 75. I'd like to be away from that number just because let's take a peek again over here. Let's just see what's going on. So here's market maker positioning. So here's the IC whales calls. Here's the short long. And then I guess you could be at 80. I mean, there's 1,000 sold calls up here at 80. Well, 13 puts, but let's not worry about those. And so this we should stall out up here, and you got this little thing here. But you have for tomorrow, and I remember when this came in, you have for tomorrow customer long calls at 62.75. So somebody's betting that that we probably take out the all-time high. Now, I'm not saying that that's necessarily significant that their bets are right or wrong, but what does make it significant is the required dealing hedging response tomorrow if we're in this 6250 area, how that could be a magnet, especially when volatility comes in or expands. That's because And so, and that's if you take a look for tomorrow, is somebody long a bunch of 6275s, which will have an effect. Now, if we're below it, it's going to have a ceiling effect. It's going to push us down. So just pencil that in the back of your minds. Any questions, comments, or whatever? If not, let me just, okay, I showed you the mental cue thing. And just for, I didn't have time to show you VIX. Let me just show you something here. So they also have futures. So if you're an oil trader, I've been known to trade oil once in a while. Where is it? Come on. There you go. So here's levels, gamma levels on oil. And we got gamma levels, of course. I know there's tons of E. You can do it. You can do it. There you go, etc., etc. So if you like messing around with futures, and maybe if you're using SPX gamma levels and you want to kind of superimpose futures on it, because you're trading futures, but you use SPX gamma set on. Of course, they have NQ, etc., etc. I'm not going to go through the whole deal. All right, let me close that. Let me open this. I trust my level is more than anyone else's because I did it. Now, let me encourage not that I'm invulnerable because it has meaning to me. So I'd like to encourage everybody to do your own game plan, whether it's elaborate like I do or five levels, three lines, what you expect, something. Start somewhere so that you go into the day having an idea of what you're looking for. I found it really helpful. I was resistant to doing it for years. I would do it mentally and wouldn't write it down, and then started writing it down and went from 10 minutes to 20 minutes to 3 hours. So, anyway, that said, okay, what does it say? Oh, I didn't, I missed the gangster voice comment. Oh, oh, the gangster voice? Oh, I like the gangster voice comment. I like gangster voice comment. I didn't see it. Otherwise, I would put it up. Yeah, I'm New York from the kind of middle class projects, whatever. I grew up on the Lower East Side in what would be called the melting pot neighborhood. Um, Literally within 2 or 3 blocks, we had the Jewish working class shopkeepers and postmen and whatever, which is my family. And we had Little Italy right up the street. We had Chinatown right up the street. We had the Afro American projects. They didn't call it that at the time. Like on the other side of the fence on my block, we had the Spanish projects right below, like about a block away. And we had Stuyvesant Town where the tough Irish kids were a few blocks away up there. If you want to go a little further, you had Germantown, and that's kind of where I grew up. It was a interesting neighborhood. And West Side Story was a movie when I was a kid at that era. So we had little gangs of 8-year-olds fighting each other in the streets. 8-year-olds. We had the big kid, the bully, 13-year-old gangs beating up the 8-year-olds. That was kind of the thing too. So anyway, that said, um, that said, I'm going to cut it off now. I don't mind talking. I don't mind telling stories. Anyway, let me stop and get back to business. Take care, everybody. Bye.